Hi, this is Sai Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the forexpsummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpsummit.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we decided to speak on the Great British Pound because in the gold market actually the driving factor stands the same as for the euro, and everything we have discussed yesterday in the weekly report dedicated to the euro. But on pound sterling we have some specific driving factors, for example the election of the new prime minister, additional political information, and that makes a bit unique situation in the United Kingdom and around the Great British Pound, which has, as you can see, its own trend compared to other forex markets. So if you take a look at the euro GBP currency pair, you can see the definite trend there, and it stands a bit different compared to other dollar-related currencies, so euro currency in particular. And that's the reason why we decided to take a look at on the cable and trying to estimate what could happen in the nearest future. In two words speaking, guys, the fundamental research that we have made mostly confirms our long-term bearish setup. If you would like to know the details, you could read as usual our weekly report. So here we bring a lot of information on the Boris Johnson current policy concerning Brexit, a lot of statistics on the United Kingdom economy, what to expect, the policy of the Bank of England. Actually, we will get the new decision on the 1st of August. This will be very important for the market, decisive decision, because currently investors think and view on the economy different compares to Bank of England. The Bank of England has too positive outlook for the United Kingdom economy, while and on the interest rates in particular, while investors treat the situation a bit different and see it more in the black colors compared to what Bank of England see. So, and all this stuff put the shadow on the perspective on the United Kingdom currency. Another new driving factor could appear very soon in the speculation about early elections. So as you know, Boris Johnson really has undecided the problem, and the solution, it's very difficult will be to find. I mean, the Brexit agreement. It's very probable, and we could say even that it's more probable that no new agreement will be achieved on this subject. And as soon as big barrier could appear in the parliament to put through the agreement that could be achieved maybe by the Boris Johnson, it could raise the talks and rumors maybe around again it's possible new elections in the parliament, early elections, because the ordinary election should be only next year. So all this political stuff creates the interesting background, which is mostly bearish for United Kingdom currency. And it's really a lot of things that we should keep an eye on. Now let's take a look what we have on the technical picture. On the technical side, long-term charts actually keeps the same idea. The next target in the long term stands 113, I mean on the monthly chart. Meantime, as we're coming to the Fed meeting, it could be some pause in the downside action, especially because market is coming to the daily target. So in the beginning of the month, we talked about here is about hand and shoulders, and we tell that if market will break this area, 25.50 approximately, be prepared for downward continuation to the XOP because the hand and shoulders will fail. And that really has happened. So you can see, here's the breakout has happened, market gradually is coming to the XOP. Our XOP 23.40, and it almost is done. So here we also see some bullish signs, so falling wedge, rising divergence, and again, the Fed meeting that could bring the volatility on the market, that could become the catalyst of the possible technical pullback here. So everything is possible. But at the same time, I would like to say a couple of things. First of all, wedge patterns, yes, they indicate the exhausting of the bearish pressure by appearing, because lows stand slower than the tops, and it indicates that selling power becomes weaker. But at the same time, although in most cases wedges are bullish patterns, I mean falling wedges, sometimes it happens that the downside breakout follows with the fast acceleration down. So, and currently, as we have the Fed on the horizon, we can't ignore this scenario as well. That's the first moment. Second moment, it's really specific for Great British Pound. If you will take a look at the all-time chart on the cable, you will see that all major supports already have been broken, including all-time 618 fib support. So in fact, Great British Pound currently has no significant support levels, fib levels below the market, and all support that could be provided is coming from the extensions. And that makes the task for bears simpler to push market lower. Besides, I would say that if you'll take a look at the monthly chart, you will see the market already stands slightly below the yearly pivot support one, and even pivot supports already have been broken. What I would like to say is that, of course, you could take the long position. It's not forbidden trying to trade Great British Pound long, and maybe you will get really outstanding trade if you will be in right place and right time with the significant upside pullback. But taking all driving factors together and keep them in mind, makes us think that it would be better to skip the retracements up and just use the retracements for better levels for taking the short positions. So as soon as market hits the target, you'll see some bullish signs appearing. Take the profit, see what will happen, or keep the minor position with the stop, counting on the fast breakout down if you would like to take the part in this. If you do not want, just take the profit and see what will happen. If retracement will start, do not trade it and see when the market will reach some predefined resistance, forming some bearish continuation pattern that lets you to continue downward action. So that's our trading plan, that's our strategy here on Great British Pound. But of course, if you would like to trade it long, you could do this. So, for example, XLP target on the next week could be finalized by this butterfly. Butterfly by itself, it's a bullish pattern, and you could try to use it for taking the long position if you're counting on some pullback, trying to make some pips on possible retracements. It's also possible because we do not know what Fed results will be, and maybe some technical pullback will happen here as well. So that's our view on the cable right now. Coming week is promising to be very interesting, so let's see what we will get.